topic when we talk about risk, security. And as in our organization also, I mean, this is the last thing which we talked about. And so here also, I think the organizers have kept this as the last panel only to discuss on the important thing in terms of risk and security. So uh, I think when we talk about this digital risk landscape and digital transformation, I think the way this industry has transformed in the last 2 years is phenomenal. I mean, when we suddenly one day the government announced the lockdown and we didn't know how to work. I mean, the NBFCs, MFIs typically work on feet on street. That's the model. I mean, if there is no connect, there is no money. I mean, I think that is the way we have been. But I think the fintech companies, I think, came as a savior at that point in time. And that was the time when actually this industry realizes, no, actually we can also work using the technology. You were always thinking that we cannot work with it, but I think we can still collect money. While physical connect is extremely important, but I think technology or digital transformation actually helped in terms of not only reducing our cost, but also increasing efficiency, increasing productivity, increasing customer experience, some of the things. Other thing which has happened in the last couple of years is that when we talk about in the original avatar, NBFCs typically used to have a single credit policy. And everybody used to be rated on that single credit policy. Now with AI, ML, we talk about robotic process, data science, this thing, robotic process automations. Now, what is happening is that you can have customized credit policies. I mean, you can bring a lot of people who were earlier not in the process of being available to their loan with these companies because they didn't have any credit history available. How to give loan? Now, with these things, you are able to have now alternative credit scores, which is another thing available. Now, to give you some statistics in terms of digital loan, this thing. Now, in the last year, we had around 270 billion of loan, which were from the digital lending perspective. Now, this is expected to reach $350 billion this year. The digital loan lending market will be around $350 billion. This is what is expected to be this year. Now, with the digital transformation, there is a 40% drop in manual KYC, which has resulted in more than 60 to 70% cost of reduction in the cost of KYC doing itself. I mean, that is how the technology transformed it and helped in terms of the KYC. Other thing is that now when we look at this digital transformation and this thing, it also brings inherent risk with it. You have a security risk, you have a third party risk, so you have cyber security, the multiple risks associated. I think let's understand from our learned panel in terms of how they are managing the digital transformation, how they're reaping the benefit of digital transformations, and how they're managing the risk associated with that. So with that, I will first request Asta to you. Maybe you can introduce yourself. I mean, when I was talking to Asta, I mean, she's a very unique industry. They only fund loans to the women entrepreneurs. So Asta is a very unique industry you are into. So just tell about your organization and how you are leveraging the technology and also this risk management part using digital in this thing.
Hi, good evening, everyone. I'm Asta from Share India FinCap Private Limited. We are a Noida-based NBFC, and we cater to mostly women entrepreneurs in rural areas. We are currently present in 4 states with about 65,000 clients. So technology, I believe, has transformed NBFCs tremendously in terms of productivity, efficiency, and resilience at multiple levels. So with so many software companies offering software on SaaS models, recurring processes of onboarding the client, the credit assessment, the disbursal, and collection thereon have become very simplified. So we at Share India are definitely following the RPA processes in the credit assessment of the clients, especially after COVID, with every household has at least one smartphone. So this has definitely enabled the NBFCs to establish the final connect to reach out to their customers directly. And this direct connect with their customers the customers can remain updated about the loans that they've taken from the NBFC and remain connected throughout their lending cycle. With UPIs gaining so much popularity, especially in tier 2, tier 3 cities, the customers can use their smartphones to make digital payments. So technology, I would say, is not just benefiting the NBFCs, but also fostering a cashless economy in the rural areas. Also, at Share India, we have enabled electronic signatures, and we've gone totally paperless. So even when the customer is not educated to put their own signatures on the paper, they can simply come, put their use their biometric signatures and sign the loan document and immediately procure a copy of the same, which does not even have to be stored in a physical form. So that's about it. Thank you.
I think you rightly said this payment through the UPI and other things. I think it is not only increases this thing, but it also helps in terms of reducing the frauds, which is because at least you have a payment directly coming into the bank. Yeah. So now I think I will move to Dr. Sharad. Dr. Sharad, you are actually operating both in a physical and digital mode. So could you please help us understand your journey in terms of this complete life cycle, how it is helping the Satin and how you're managing the risk within your company with this technology and other things?
Sure. Good evening, everyone. Good evening, Dr. Anand. So we, from the right, since the morning itself, we all know that everybody is talking about digitization, how it's helping, onboarding part, and how the payment can be collected after the loan disbursement has been done. The major crux or the utilization of digitization in between the loan origination and collection is the disbursement, sanctioning and disbursement. That is still at a very native stage, I believe, in our industry. And we can source the file, we can have online applications, we can have video conferencing or video KYC part thing, and we can have a digital signature. But once the customer is onboarded, if you wish to lend the person, then there are certain tools which are available. We can say that we can check his digital footprints, how he is working in social media. We can scrap or we can do a scraping of his messages, that how actually he is using the funds which he has earned, what kind of expenses he is doing. So we have a platform called a credit bureau, where we all know that we can analyze the history of his already taken loan, how that they are performing. But still, I believe that there are a lot of scope wherein the improvement can be done. The way people are actually using the social platform is still not being analyzed, it's still being in a native stage. And definitely, if we make these tools more interactive, if we make these tools like bureau reports more interactive, it will be very helpful for the financial institutes to actually understand how the customer has behaved. For example, if we take about a bureau report and they say that there is a default in a loan, and we talk to a customer that the report is showing that you have done a default. The customer says, in which bank I have done the default? I don't know. And the report which is being shared by the bureaus to the financial institutes doesn't give us that kind of a detail. So it's again a question mark. So we have transformed from physical papers to a digital platform, but a next level or stage two has yet to become. And I can foresee that yes, things are moving in the right direction, and definitely we will be in a position to actually analyze what a customer is behaving, what customer is using. But yes, the final say will still be with the underwriter, who is having a touch and feel with the customer. Digital platforms are there to support the underwriter. They will for supporting. There will be just like a tools, but end result has to be, I believe, with the person who is actually meeting with the customer, because we are into lending of a mortgage loans, which is a 10 to 20 years vintage. It's not a consumer durable loan which needs to be done or sanctioned in 1 or 2 minutes. So what I believe is that the digitization is coming in a very good way, but it should be used as a tool, not as a substitute of a physical touch and feel underwriting.
I think, Dr. You talked about very important point. You said that while this technology is helping the credit person in terms of underwriting and this thing, but you cannot substitute the physical this thing. I'm just curious to ask you one follow-up question to related to this only.
Sure.
Now, in a new scenario where now you have technology which is aiding this thing, are you seeing some inherent risk of technology being coming to assistance, or you think that earlier was better the days when you didn't have any technology and it was purely on the mind of the or the skill set of that underwriter?
I totally believe, if let's take an example of a simple one which everybody knows, that if I know how to drive a manual car, it will still be difficult for me to drive an automatic car. It will take some time. Right. So similarly, if an underwriter can use a digital tools available in the market or in the other platforms, and add it whatever advantage it has with his personal individual underwriting skills, which still needs to be a meeting a customer individually. Now there is a lot of applications which I understand that companies over here are providing video PD, right? So we are not going to the visiting the personal to the customers and doing a 5 minutes, 10 minutes, or even a 30 minutes video query. But you won't be able to judge whether the background or whatever stock he is showing to you is actually of his or somebody else. So you need to present you over there. So you need to check. You do need to do a neighbor check that whatever premises he is showing to me is actually his or somebody else. So that combination of digital platform, digital tools along with physical PD, physical interaction, touch and feel thing has to be there. It cannot replace 100% physical touch and feel before we do an final sanction to a customer.
Yeah, I agree. So basically, you moved from a manual car to semi-automatic car.
You can say that.
Yeah.
You can say that.
So let me ask this question to Asta to you. What you think in which stage you are? You are into manual car or a fully automatic car?
I think we are in a phygital mode, wherein we interact with our customers physically. First of all, through the LOS, the basic data of the customer comes to us, and then we send out our workforce to visit their houses and do the respective checks. Only once the customer goes through the phygital checking, first the digital and then the physical checking, is the borrower sanctioned that particular amount of loan.
Thanks, Asta. So let me now move to Dinesh. I think till now we heard the views of the business teams, a management view and a business view in terms of how technology is working. Now let's hear from Dinesh. So Dinesh, you being the CISO in Shubham Finance, I think. So you have a very tough journey now. I think you heard two panelists talking about the manual car to semi-automatic car. Now, when we talk about the IT, I think one of the important tasks first is to protect the digital assets as a CISO, and also ensure that business still does not see other disruption, because when the moment we start putting the security measures, we start putting certain restrictions, and the users say, no, you are stopping my work, my productivity is reducing. Being on the same side of the table as you are, I can feel that thing. So I think how you are using this entire journey in terms of protecting the cyber risk, this sets along with this digital journey, because I don't think digital there is any choice now. We have to move to that side.
Hello everyone. I'm Dinesh, CISO Shubham Housing, and we are a Gurgaon-based NBFC. Basically, we are working in a affordable housing segment. Actually, today on the outside this hall, I'm just discussing about my panel is the last panel. Same scenario like a cyber security in the organization. I'm just joking. I'm just sharing my personal experience because Mr. Sharad is just sharing the personal and the digital both are required. In 2013, I have applied for a home loan, and one of the bank executive come to my home and they just fill the complete form and just suggest, sir, within a 5 day your loan will sanction. But after 5 days, when just call him, well, sir, next 7 days need required. After 7 days, your loan will sanction. After 20 days, when just call, I just arranged his senior's contact details, and they told me, sir, your form is submitted before 4 days. And end of the day, this is not possible to be not possible to sanction your loan because your building is under construction. Somehow I'm just arranging the contact with the one NBFC, and my loan will clear within 4 to 5 days. So I'm just sharing my experience, like a customer, not like a CISO, not like a NBFC employee. So this is my personal experience. So I'm just sharing why digitalization is required. Digitalization, sorry, why digitalization is required. Digitalization required just change the industry. In fact, after the demonetization, whole industry just see or the technology, move through the technology. And post-COVID, everything, every person just thought about, yeah, digitalization is required, along with security also must be required. In the before 7 days, UN just shared one report. There are 1.42 billion population in India. We just reached 1.42 billion and across the China, world largest population. And only 137 bank is served the complete 1.42 billion. Is it possible? I don't think so it's possible. And 9,500 NBFC serve the complete 1.42 billion. So with the physical form, it's not possible to serve the complete organization with the satisfaction, customer satisfaction. So digitalization is must. The second point is the security. Yeah, obviously, business always asks, यार क्यों ये हमें परेशान कर रहे हो? But security is required because when your book size increase, when your business increase, obviously your cyber threat must be increased. Right? My third point is your CISO is capable. Third question, because everyone just want to mitigate only compliance prospects. The compliance prospect RBI asks, yes, CISO is required. So next day, one of the business person told the salesperson, yeah, you are just signing like a CISO. No, CISO should be technical, right? The third point, how you just mitigate the complete risk. So, Anand sir, my suggestion is, whatever is the framework you're just applying, either is a NIST framework, either it's a CI framework, but it should be monitored, it should be implemented properly in your organization.
So how you are doing all this thing in your organization?
It's a very good question. Actually, in 2019, before COVID, we have just make a roadmap, right? What's our next 3 years plan? And whenever you know not make a roadmap, it's not possible to implement the complete security tools in your organizations, right? And 2020, I have remembered the March 2020, when just management asked, yeah, it's not possible to serve in the physically presence in the office, but business would be run, right? So after that, suddenly they just told me, yes, security is required, but business must be required, right? So that time, so suddenly we just over the night, we are just arranging some VPN connection and other things. But within a 6 months, there are some threat on the VPN, right? RBI and a certain there's some threat on the VPN. So overnight, we just implement the zero trust network, the jet TNS security, right? And implement the different things, the client level machine to the gateway level.
Yeah, no, very rightly said, Dinesh. I mean, I think when the COVID came, suddenly everybody was talking about security, security, security. And I realized, I mean, I think it is also a fact that, and excuse me, I mean, you two are on the management side, if I do so. Earlier, the CISO has to stand outside the door of CEO to seek a budget. Suddenly, I mean, after COVID, CEO said, no, no, tell me how much you need, and let's do that. I think that is a, I think COVID has made the not only technology but even security extremely important because people realize that there is suddenly a spurt of malicious activities happening across the world. I mean, no organization, I think, is safe. It is just a matter that if you're not hacked, it's just a matter that when is your turn. I think the time is that we all do all necessary steps. So other thing I think which is important is that it is not important that you deploy multiple number of tools. I mean, whatever tool we have deployed, it is important that how effectively you are deployed and how effectively you are monitoring those particular tools. I think that is extremely important.
And one point just want to add, right? Most of the NBFCs outsource the complete the security services, right? And as per my understanding, previously the same type of regulatory is not required for a fintech organization. But RBI is very serious about that now. And in December 2022 and recently the 10th April 2023, RBI is setting one outsourcing policy. And after this outsourcing policy, I believe the security must be increased in the fintech side as well.
Yeah, very true. I think that policy is supposed to be implemented from October 2023.
Yes.
So I think even RBI is taking cognizance of that. There is a lot of risk which is there, and how do we ensure that the data privacy, which is becoming extremely critical.
There might be data privacy bill, recent data privacy bill on table. It's after data privacy bill passed by the parliament. So definitely it will change the complete industry.
Yeah, very true. So on this note, let me go to Ranjit. Ranjit, I mean, as compared to the other organization that we heard just now from the fellow panelists, your organization is one which was born as a technology company, as a fintech. You came up as a fintech company. So tell us how this entire journey of the CredAble, which is completely born into as a technology company, fintech, completely fintech company, how you're leveraging the technology and how you are managing the risk associated with this particular with the adoption of technology in your organization.
Thanks. Hi, I'm Ranjit. I head credit risk for CredAble. We are a supply chain finance platform, and we also do supply chain finance lending. So as Anandji just pointed out, we started out as a fintech offering aggregation of supply chains and supply chain management solutions over our platform to corporates and to financial institutions. And because we were, handling and onboarding vendors, interacting with banks, we were using our platform to connect to financiers, and a large volume of invoices was flowing through our platform. It also provided us the opportunity to actually start lending into those situations. So those vendors could become our borrowers potentially, and that's the route we took. We became an NBFC. We started lending into various to start with various vendors who were selling to larger corporates, and then gradually upscaling to setting up vendor financing programs for larger corporates. So that's the journey. Now, obviously, since we became an NBFC, or you need to set up a full-fledged credit risk function there in order to ensure that you pick the right kind of borrowers. And once you've done that, you need to keep monitoring them, keep ensuring that the credit quality stays good over a period of time. So that's the basic credit risk framework that any organization needs to have. But at the same time, since the portfolio is continuing to grow at a rapid pace, a key factor is how scalable is all of this. How can you build a process and a framework that can today, if it is handling 100 crores, tomorrow it can handle 1,000 crores. Can it handle that kind of volumes? Can it handle without a proportional increase in risk in the system? So that's where the digitization and technology comes in. Unlike the speakers before me who were more on the retail lending platforms, we are into corporate lending, so our ticket sizes are slightly higher. Having said that, it spans the entire range, starting from sub 50 lakhs, going up to 10 crores, 15 crores kind of deals. So what my observation has been that and that's our journey. That it's first of all, the need for digitization increases as you go down the ladder into smaller ticket sizes, because there, just underwriting a loan on the basis of financial statements is difficult, because the quality of financial statements for small companies is not necessarily very reliable, and that's where you need to start pulling in data from a lot more alternative sources. So therefore, the integration that's done with, say, the GST, the ability to pull in bank statements, study bank transactions, the look at various statutory compliances, whatever information is available on that corporate in the digital world is something you need to collate together and form your opinion. So that at a very basic level is what digitization does for credit risk management. But going ahead, once you've done this, established a basic platform, the next opportunity is to start digitizing different elements of your credit evaluation. So if you have a certain way of absorbing, say, simply the bureau reporting, right? You can move towards digitizing that component. You can move towards digitizing, say the way you are evaluating your bank statements. You can use various tools that are available for this. You can establish API connectivity to a lot of platforms today, so that this information is available to you real time in a processed manner. So all the various building blocks of that credit evaluation that you need to do can be digitized, and therefore the analyst who's taking the credit decision, formulating a credit view, finds it easier. There's far more efficiency, far greater standardization. That's something as a next level of digitization can be done. And then further going ahead, for an organization which has relatively mature processes, you can start leveraging AI for interpreting each of these building blocks, all the information that you're processing over a period of time. And there is that's probably the next level, where once you can start leveraging AI, you can digitize a large part of the credit evaluation, and actually look towards generating a lending recommendation, even for complex situations which involve multiple counterparties, slightly complicated structures. So that's I think is really the pinnacle in terms of digitization. That is what we aspire to achieve over a period of next few months. But at the same time, I do agree. It was pointed out that at the end of the day, the human element cannot be taken out, because there is an element of art as well as an element of science in credit evaluation and risk management. You can never take out the human element. Therefore, there is this, in terms of the experience of dealing with a corporate, evaluating past credit histories, etc. So that will always stay. Perhaps what we can do is to also support it, augment that, to ensure that a better quality underwriting can be done in real time.
No, thanks. I think you rightly said. I mean, this technology helps aid the credit guy. I mean, if you were able to do maybe 10 credit evaluation during the day, now with this technology, you may be able to do maybe 15, 20, or 25, because it helps him to take a faster decision-making processes. Another important point we talked about this AI and this thing. I think you very rightly said. I mean, for us, if you have to have AI or a machine learning to be able to give us some kind of insight, then you also need a huge amount of data to be able to analyze and give you some this thing, because it requires a lot of training, retraining that particular model. So that comes over a period of time only. You can't have on a day one when you have a very
which is why I said that at a certain level of evolution is when you can start really leveraging these technologies, and that level of evolution is what you refer to. One of the things critical to that is having a strong data platform.
Yes.
Once you build that, you can mount a lot of applications.
Lot of applications. True. Yeah. Thanks, Ranjit ji. Now going back to the lady Neha. Neha, you are into the sunrise industry, so as to say, the EV financing. I think everybody is talking about EV these days. And I mean, the way this industry has transformed, I mean, be it the personal vehicles or be it the very basic, the rickshaws. I mean, I think, from a manual rickshaw pulling to this EV, I mean, there was a time when I just stopped sitting on a rickshaw. I said, no, I will not, don't like to have man pulling a man. So I said, I will not even sit on a rickshaw. But I think that we have transformed into this industry. Since Sunrise is a very new industry, I'm sure you would have also ventured recently into this thing. So you had a best of technologies to be adopted into part of this. Tell us how your journey has been into this, your organization in terms of this, and how you're leveraging some of this latest technology. If you are, just walk us through.
That have been seeing a lot of traction across the country now. I think Delhi was the flag bearer of EVs when it just began, and now it's spreading like wildfire across different states. So we're very happy about the demand and the supply within the ecosystem. It's definitely at a very nascent stage, so there's lots to be figured. And whatever I speak of next would be solely from my experience. So I'm not benchmarking anything that's happening in the industry, but our experience has been phenomenal. Over the last 18 months, our average disbursement growth has been 58% with 120% in revenue jump. So the kind of growth we have seen has assured us of the sustainability and scale of this industry going forward in the next 5 to 10 years. And with Niti Aayog, with the government in play now, there's been a lot of subsidy push. There's been a lot of financial push to companies like us from the RBI, from banks like SIDBI, from SBI. So we are seeing a lot of positive traction. And one of the cons of being this nascent in an industry is that we don't have a lot of data. So we are the ones creating that data bank for a lot of new NBFCs, large NBFCs and banks that would potentially be interested to co-lend with us in the future. So a lot of banks, like the large banks, have already approached us, like a smaller NBFC like us, to be able to co-lend because there is no penetration of EV financing from any large players as such. So technology definitely plays a role here, sir, because there is no way we can tap that kind of adoption and enability without technology. So we don't want to have a 1,000 employee company size. We want to maintain ourselves to 200, 300 people and become as lean and agile as possible. And how we're doing that today is that on front end, we've deployed WhatsApp because that is the common tool that everyone across the country uses today in terms of using the internet and having a smartphone like everyone else said. So deploying WhatsApp on the front end, and we are the first NBFC in India to partner with this AI-based platform out of the US, which is a risk mitigation platform that we integrate with our LMS and LOS, and that has the capability of giving us a decisioning in 30 milliseconds. So it runs those multiple thousand checks in the back in terms of fraud checks, in terms of criminal background checks, in terms of KYC verification, bureau pulling. So, you name the policy metrics that you want to put in it, and it gives you those kind of the data. But how we're lacking in that system today is that we are not able to leverage the AI part of it because we don't have that rich enough data bank. So we are now in the process of slowly building our data bank to be able to reach that level of leveraging that thousands and 10,000s lakhs of data points that can give us a better decisioning, which will help us enable to customize products for the segment that I'm working with. The kind of people I work with come out of tier 2, tier 3 towns, and their maximum income does not go beyond 25,000, 30,000 rupees, right? So to tap that segment, I need to understand their behavior, their psychology, their demographics, and it's more comprehensive than just writing ki age 21 below hona chahiye, maximum should be 58. So that is a very traditional way of going about it, and that is obviously the way we started also, because that is how a traditional NBFC starts. But now we're in the process of leveraging that technology, the AI part, the digital part, in terms of collection, in terms of disbursement, in terms of underwriting, and trying to make it as agile as possible. So, yeah.
Yeah, thanks, Neha. So I think there's one common point which we all are talking about. One is that technology certainly helped in terms of increasing the consumer experience, in terms of increasing efficiency, and in terms of increasing the productivity. But at the same time, from a risk perspective, you cannot eliminate the human side of it, because technology will help in terms of aiding maybe the faster decision making, but that human angle will always remain during the underwriting, for the underwriting of the loans. This thing. With this, I open the forum for the questions. If even anybody has any questions. Okay, no questions. Thank you. Thanks, everybody. Thank you. It was a pleasure interacting with all of you. Thanks a lot.
Thank you.